Salam, salam, salam. Thanks for your question, whoever you are. Um, so I'm just going to answer to this question right here. How do we use the boss logic? Okay, and we're going to jump straight to TradingView. So to get it for free, like I said, you go to TradingView indicator and then you search um, Enigma boss logic 387. You can also read it here, read more about it, but I'm just going to break it down for you. It's very simple. Focus on a 2 to 1 risk to reward. Okay, obviously you want to risk anywhere from 0.50% up to 2%, and you want to limit yourself to 1 to 3 trades per day, meaning if you take your first trade and you win, you call it a day. If you don't win, you take your second trade and you win, you call it a day. Because let's say that you enter your first trade here, right, aiming for a 2 to 1, and then the market come and hit your stop loss. That means you only lose 0.50%. But in the next trade, you enter again, and then now you made 2 to 1. So actually you ending up with a profit, right? And you call it a day. That's it. Consistency. Now, the logic. Why is this here exactly? Is because the boss logic. So I'm going to expand the 30-minute time frame on gold, and we can see the Enigma boss logic is right here. This is the current settings that I'm using, right? So you can use the same, and I would advise to only use it during the ICT kill zone, right? So here is my settings for the ICT kill zone. So 300 here to have maximum history, and then these are my time. I changed. I don't use the New York launch. I just change it to identify a period of time during the Asian session on the market. So you can copy the same or just keep it by default. It's up to you, really. It doesn't really matter. But basically, you want to really trade during the kill zone, because the kill zone are going to provide high probability trade setup, especially if you're trading gold, because gold start to move during the Asian session. So the Enigma boss logic is based on a fractal understanding of break of structure. And it's very simple. We have two types of break of structure. We have a bearish break of structure, and then the indicator will place a red line. And then we also have a bullish break of structure, and the indicator will place a green line. So as you can see, all the green lines here are when the indicator is identifying a bullish break of structure. The red line is when the indicator is identifying a bearish break of structure. So technically, you can use them as area to buy and to sell. So what's the logic behind the detection of these levels? So to identify this level, the indicator is looking at a bearish candle followed by a bullish candle. And then when a bearish candle body closes below the low of this bearish candle, that's a fractal break of structure. And then the idea is to wait for the market to retest and to sell. Vice versa, for the bullish break of structure, the market is looking to identify a bullish candle followed by a bearish candle. And then when a bullish candle body closes above the high of the bullish candle, it will actually place a green line to tell you you can look for a buy trade here. So when we go back to the 30-minute time frame, we want to do everything in pairs, right? Because we are trading fractals. So I'm going to show you a scalper or intraday perspective, and then obviously I'll show you swing perspective as well. So I'm going to split the screen in two. On the right side, we have the 30-minute time frame, and we're just going to use the same example I used earlier on the Asian session. And right now, as you can see, this line right here, I'm just going to place and highlight this line here so that we can also see it as a reference on the 1-minute time frame. As you can see, the line just showed up, and I'm going to click right here, and then this is the area when it got retested this morning, right? And then it went up, right? And then this is a red line from the 30-minute time frame. Then I'm going to place a red line right here so that we can also have that reflection on the 1-minute time frame. And then the idea would be when the market is retesting it, we are going to sell from that angle. Okay, so the market comes here, Asian session, it comes and retests this bullish break of structure. So obviously on the 1-minute time frame, for scalper perspective, all you have to do in this scenario, I'm just going to expand now, is wait for the market to actually show you sign that it wants to return back up. So very simple. For example, when this candle closes at the line, right, you can just take a buy trade right here, right, and then put your stop loss below the low. right here. The reason you do that, because like I said, very simple logic, you just go for 2-1, and it doesn't matter. You do not want to attach yourself emotionally to the trade. It's about money management and probability, no guarantees, right? Now, as you can see, the market went up a little bit, okay, a little bit more than 1-1, and then it came back and hit the stop loss. So technically, if we risk 1%, right, we only lose 1%, and then a few minutes later the market comes back again in that direction. So then we take the trade again, right, because we have free trades max in one day. Stop loss is going here, same, we are aiming for a 2-1, right? 2-1 is right here, as we can see. A few moments later the market goes and hits a 2-1, and that's it. You call it a day, right? Discipline, consistency is about quality, not quantity. So that's it. That's one example. And obviously, if you miss that opportunity, then you'll apply the same logic in the opposite direction. The red line represents the sell logic that we identified on the 30-minute time frame. The market goes above it, it starts to return towards it, then you sell. Right here, you put your stop loss above, right here, and then you aim for your 2-1, right? And then you have your 2-1 right here, and then you see it went straight to take profit, alhamdulillah, and then we move on, and then we call it a day. Now, let's say that you do not want to trade this way. Maybe you are more interested in trading on based on a swing or a longer period of time. So you can also use 2 time frames, such as the forward time frame as your bigger time frame for your analysis, and a 30-minute time frame for your execution. So I'm just going to show you a different example here. So for instance, if we look at yesterday, so yesterday was a great example. So right here, yesterday we had this example right here. It was something that I was observing in real time. So here, so why do we have this line? Very simple. We had this line is connected to these areas right here. We have a fractal break of structure, which is right here, bearish candle, right, followed by a bullish candle, and then this candle body closes below the low of this candle. It confirms a fractal break of structure. This next candle comes and it goes slightly above the line, and then it drops. So if you're looking to trade based on this time frame, then you want to reflect that price level on the 30-minute time frame, then all you would have to do is basically place your line matching the same line, so that when you come on the 30-minute time frame, then you would wait for the New York session, or because obviously a lot of the time it's going to happen during the kill zone, right? So as you can see, this area right here, so if I put entry positioning right here, you will see that it's basically connected to the US session. So as you can see, the market went above, and then when the market starts to return, you can sell right here, right? Just so the idea is either you sell above the line, right, and then you can also activate the indicator here on the 30-minute time frame and get even ultra precision, because this line is basically your bias, your directional bias. So you're looking only for sell trade. So when you come on the 30-minute time frame, you can also refine that level or refine your discount by identifying bearish fractal break of structure on the 30-minute time frame above this line. So for example, as you can see, the market came and returned and tested this break of structure that was previously identified on the Asian session here. So that is where you could have either entered here, or while the market is going down, entered here, or entered on this break of structure. Either way, as you can see, you have many areas where you can put stop loss, either here, regardless of, let's take the largest stop loss just to be extremely to give it room, right? And then you can go again for your 2-1 and call it a day. So that would be maybe not a swing, also an intraday, but yeah, on every time frame that you can retest. Let me show you the weekly time frame quickly, so you can see it's very accurate. Actually, it's very simple because it identifies them. It allows you to trade with the real trend all the time, right? So maybe if I do a market replay, it will be easier for you to see how it performs in real time. So let me just make this quickly. So you'll see, so for example, you see we had a red line, and then because the market it's going up, then it cancels it, right? Because it's basically, it will confirm the line according to the trend, because we always have to wait for the market to return to the line, like, so that we can buy or sell, right? And the way I coded it with ChatGPT, actually, because I do not know how to code, and none of the so-called gurus of the trading industry wants to collaborate with me, because they want to sell everything and I want to do things for free, right? So if anybody knows how to code and want to collaborate with me, I think we can improve this indicator even more. But anyway, that's not the point. Let me just show you a few examples of when the market, how it performs, right? It basically gives you key levels, right? So sometimes, and this is the weekly time frame, obviously, but you get the idea, right? So if I go on a different time frame, such as the 30-minute time frame, I can also show you the replay, and you'll see it's actually very interesting the way it provides opportunities. But like I said, as long as you are disciplined and you are understanding that this is for the long run, you will see that all these here are very easy opportunities. You see how the market is returning to test this area. So you can buy below discounts because everything is a fractal. So maybe on the lower time frame, you'll have a fractal here on the same direction. And you can see the market is always trying to identify. So when the market is consolidating, obviously, yeah, you're going to accumulate losses. But we are not here to avoid losses. We are only here to trade with discipline, with consistency, with wisdom, the understanding that the market is not our friend. It's all based on probability. Okay, so hopefully that will help you guys. Thanks for watching. Thanks for your time. My name is Nico Picasso. I love you. Allah loves you more. And then, like I said, all glory belongs to Allah. If you want to join my group for free, I have a free group on Telegram. I also have a YouTube channel where you get the link for my free group. If you want, you can just ask me a DM on X or wherever you see this video, and I can send you access to my free group on Telegram where the majority of the people uses this to trade, right? So it's really up to you. And again, if you are serious about trading, then it's always best to be in line with other people that have the same mindset. Okay, thanks for watching. Have a great day. Always put the stop loss and trade safe.